Okay, so for this video, I wanted to go over this new $600 reporting threshold for the 1099K. So I'm getting a lot of questions from clients and other individuals that are really concerned about this because they don't know how this is going to impact them, what do they need to do on their tax returns, how to report this. So I've got a couple of slides here with some examples and some of the rules and some ways that you can report all this stuff on your tax return if you get one of these. So let's jump right into it. So starting at the top there, just a bit of background on what the changes were here. So starting January 2022, the reporting threshold for the 1099K has been dropped to $600. So previously it was $20,000, so quite a high number. $20,000 meaning the amount of gross payments that were processed through that third-party merchant. So if you had PayPal and you had a business account with PayPal, if you received over $20,000 in credit card payments throughout the year from your customers, you get a 1099K. Now for business owners, this wasn't really an issue because you're already reporting the income, you have expenses, so you're doing everything you need to. But because the threshold is dropped now to only $600, there's a lot of individuals that are going to get these things now when they were just kind of selling used personal items or maybe receiving like gifts or loans from family members for only maybe, let's say $1,000 in the year, right? So if you sold some furniture for $1,000, prior to 2022, you wouldn't get a 1099K, right? Because you didn't sell more than 20 grand, so you didn't really worry about it. Now that it's only $600, and it's going to include payments like going through Venmo and Cash App, a lot of people are going to be roped into this. So now because of the lower reporting threshold, it's just one more 1099 you get in the mail, and so you're trying to figure out, well, what do I do with it? So the 1099K, also just to highlight, it only reports gross payment information, right? So the entity that's reporting this to you, they do not care what the character of the income is. They don't care whether it's the sale of services or products because you're operating a trade or business. They don't care if this was an amount that you received as a loan from a friend or a family member. They don't care if it's a gift. They don't care if it's a reimbursement, right? So Venmo is incredibly popular for somebody pays for the whole bill at dinner and then you send that person your cut of the check and then that's it. Well, now those Venmo payments are potentially reportable if they're not categorized correctly, right? So Venmo and Cash App, they are implementing a process now where you can label things as personal use, so it's not going to be reported, or if it's made in the course of a trade or business. But so for the amounts that were reported for business income, the reporting again was pretty straightforward, right? So if you were running a trade or business as an individual and you got a 1099K, you would just report that income on Schedule C, right? So if you're in a consulting business or marketing, the revenue from customers would go on there. That's it. If you're selling products on eBay in the course of a trade or business, your gross revenue would just go on that top line item, right? So no big deal. Now, I do know some landlords that are accepting payments this way for rental payments, right? So if you have a tenant that's paying you via PayPal or Cash App or Venmo and you get a 1099K, again, the reporting's pretty straightforward, right? You're just going to go ahead and report those gross rental payments on Schedule E, and then obviously you take all your deductions, and if you have positive net rental income, you pay tax, so it's no big deal. Now that last bullet point there, really want to highlight, I can't stress this enough, just because you didn't get a 1099 does not mean the income wasn't reportable. I have to have this discussion with clients every year. They say, well, I didn't get a 1099, so I guess I don't have to do anything with it. No, absolutely not. The 1099K reporting obligation is on the merchant that's processing the payments. That's it. And again, they don't care about the character of the income. It's your obligation as a U.S. taxpayer to analyze all the income streams that you have coming in and assess whether or not that's taxable. So again, if a family member gives you $4,000 and it's really a gift, okay, then it's a gift. It's not taxable. If they give you $4,000 because you did something for them, right, and it's compensation, well, now it is taxable, right? So you really have to assess what the flow of income is, and then whether or not it's going to be taxable to you or not, and then how to report it. Okay, so let's move on to the next slide here. Okay, so what do we do for 1099K reporting when it's used in a sale of personal asset type of scenario? So I have another video, which I'll put a link below, which covers how to report this on the tax return. But the general idea is if you sell personal use assets on, let's say, eBay or Amazon, and you receive a 1099K, obviously you're selling these not in the course of trade or business. You're just trying to get rid of some used stuff. Okay, but again, eBay does not distinguish between whether you're selling items for that were personal use items or you're actually running a trade or business. They're just going to send out this 1099K if you met that $600 threshold for the year. Now, when you sell personal use items, and this includes even the sale of your personal residence, many people mistakenly believe that you're only using that 8949 to report the sale of investment property, right? So if I'm trading stocks or bonds or cryptocurrency, I put all of that on the 8949, I compute my net capital gain or loss, and then I pay tax, right? The 8949 and the reporting obligation is the sale of any capital asset. So whether it's held for investment or personal use, if you sold it and it's a capital asset, you have to report that. And that really blows a lot of people's minds to think that, well, are you honestly suggesting that every time I sell something, even if it's a personal use item, I've got to report it on the 8949? Technically, yes, right? You have to report your gross sales proceeds, you report your cost basis, but then the real distinction comes between whether it's a sale of a piece of investment property or a personal use item when it comes to capital losses, right? So if you sell property that you hold for an investment, you have either a short-term or long-term capital gain or loss, right? Now the losses from the sale of investment property can offset the gains. If you have losses that you can't use during the current year, you can roll them forward to future tax years. So that's the appeal with selling capital assets that are held for investment. Now, when you sell property, capital assets that were held for personal use, the gains are still subject to tax, but the losses are not deductible. Okay? So if you sell personal use property at a loss, can't deduct it, but if you sold it at a gain, you're paying tax on it. So it doesn't sound very fair, I agree, but this is the way the rules are written. And the biggest example where we see this, and people are, I would say, already kind of familiar with this, is the sale of your personal home. Right? So if you have a home and you live in it, it's your personal use home, it's not held for investment, it's not being used in a trade or business. If you sell that property for a loss, the loss is not deductible, right? And a lot of people got burned when the housing market collapsed in 08, 9, and 10 because they were getting out from underneath these homes and they had massive losses and couldn't deduct them, right? Now, when the market is booming, people very rarely sell a house for a loss, right? So they're only worried about the gain. Now, obviously, with real property that's your principal residence, you have this nice little principal residence exclusion, right? So if you have a gain, it's subject to tax to the extent it exceeds your principal residence exclusion. So for a lot of people, it's kind of a moot issue. They never have a gain on it. But again, the rule still stands. If you sell personal use property, such as this bookshelf, right? So if you sell a bookshelf and it's a personal use bookshelf, it's not being used in your business, so it's not in your office or at a commercial property or something like that. If you buy it for $100, somehow you manage to sell it for $125. I don't know, who would buy used bookshelves for more than it was originally worth, but let's say it happens. You've got a capital gain of $25. That is taxable. Now, practically speaking, what normally happens, right? When you sell personal use property, it's always at a loss, right? If you buy a car, that's a capital asset, that's personal property for personal use. When you sell that thing, even if you bought it brand new, as soon as you dry it off the lot, one day, the value is already dropped by 10%. So in most cases, again, when you sell personal use property, you're always taking a loss on it normally. But again, it's still reportable. And this is where that 1099K threshold is really going to kind of burn a lot of people or create more of a reporting obligation, because now you're going to have to be reporting the sale of these personal use items. You're going to have to track the basis, and then you're going to have to disallow the loss if you sell at a loss, right? So if you look at the Form 49 instructions, they have a code in there, right? So when you enter the adjustment and you enter the code, there is a code L where you can enter an adjustment for a non-deductible loss that's not a wash sale, right? So wash sales apply to securities. So this wouldn't apply here. This is personal use property that's not a security. So you can still report the sale of personal use property at a loss, eliminate the loss, and then enter a code L to show that this is the sale of a personal item, can't deduct the loss, right? Okay, so now last point there, right? So if what Venmo and Cash App, again, what they're trying to do is they're trying to create, and they've already implemented this to a certain extent, they're trying to create a mechanism where you can categorize the payments. So if it's personal use payments, they're not going to issue a 1099-K, but if somebody accidentally just codes it wrong and it's reported as like ordinary trade or business income, then you're going to get a 1099-K. So if you're receiving payments that are reimbursements, loans, gifts, really try to make sure that whoever's sending you this money is being very diligent in adequately categorizing that payment to make sure that you don't get a 1099-K unnecessarily, right? And obviously you should do the same for anybody else that you're sending money to, because you don't want them to get a 1099-K either if they're not supposed to. Okay, so now what are our options as of February 2022? So unfortunately, there's not much we can do now because the IRS hasn't created a system to report amounts that are just personal use items other than the sale of the capital assets on the return, right? So what do? Well, if you receive a 1099-K for personal use items next year and they haven't created a reporting mechanism such as like the reimbursements, right? Let's say a Venmo reimbursement or a gift or a loan from a family member or friend, there's no way to report that on the tax return right now. So if you get a 1099-K attributed to those amounts, really the only thing you can do is just ignore it, right? So ignore the 1099-K. There's no way to report it on the return. Now, here's the problem, right? If you do not report the 1099-K on the return somehow, you could potentially get a tax notice from the IRS. So the IRS, once you file, they will cross-check information, report it on the 1099s with your return. If they cannot trace the amounts from the 1099 to your return, so 1099-K to Schedule C, or 1099-K to Schedule E, or 1099-K to 8949, if they can't line up those amounts, then what's going to happen is they might send out either a matching notice or a soft notice. Now, the CP 2000 matching notices, that would be kind of rare for a 1099-K. So the matching notice is issued when they found a discrepancy, but they already kind of know how the income should be reported. So for example, if you got a 1099 div for dividends and you didn't report it on Schedule B and pay income tax on the dividend income, the IRS will just send you a CP 2000 notice saying, hey, you didn't report this. We automatically calculated the tax due. Here's the bill. Send us a check, right? That's the CP 2000 notice issue. The 2057 notice is a little different. So the 2057 notice is what they call a soft notice. This is where the IRS still does the matching program, right? So they say, well, we got a 1099-K, but I can't really find it on your return. Is there an issue here? And the reason why they're just highlighting it or bringing it to your attention and asking you to either, okay, if you missed this because you were supposed to report it, amend the return, or you can just ignore it. And that's why it's kind of a soft notice, because there's really no call to action unless what you did was wrong, right? So if you, for example, I saw this a lot with Coinbase, 1099-Ks, Uber drivers, they got a 1099-K, but the Uber driver didn't do a Schedule C, right? So in that case, the IRS kind of knew that they missed something, right? So you got an Uber 1099-K, clearly you were driving for the year, so you should have reported this on a Schedule C, report your expenses, and then adjust your return accordingly. Coinbase 1099-K was the same thing. The Coinbase 1099-K meant that you were trading cryptocurrency, right? So you absolutely had some type of gains or losses or a combination thereof. And so that information should have been reported on the 8949, right? So if you get a notice, and so this is the concern I have, is with the $600 threshold, I don't think the IRS is going to assume in your favor. In other words, I think they're going to be assuming that every 1099K from PayPal, from eBay, from Venmo, from Cash App is going to be related to trade or business income. And if they cannot trace the amounts to your return, you're going to get a notice. So now when you get the notice, what do? Well, until they change the language, right? Because now it does say, look, if nothing's wrong, you don't have to reply to this. That's the language used in the 2057 notice. But if you ignore the notice and you don't reply, you don't do anything, I doubt it will just go away. I think this is an issue that's going to keep happening every year. And if you're getting notices, you're kind of already on the map, so to speak. And the last thing you want is the IRS poking around in your tax return or your tax file. You really just want them to leave you alone. So not a lot of great answers for you. My hope is, again, that they add an IRS form or a schedule that says if you got a 1099K for these reasons, you can report the amounts here and then explain why this is not taxable income to you, and then we'll leave you alone, right? So for example, there should be a schedule that says I got a 1099K because somebody sent me $2,000 and it was a loan, right? It was a personal loan. It's not income to me, but I still got this 1099K because it's over that threshold. So I'm reporting it on the return on this schedule, but the character of the amount is a loan, so it's not income, and then leave it be, right? So the same thing with reimbursements for Venmo. I mean, can you imagine Venmo, if that's not characterized correctly, all these reimbursements that people are getting could be flagged as income unnecessarily. So it's definitely a big mess. I mean, I hope the IRS can kind of come up with some practical ways to help taxpayers report these amounts if they get a 1099K that's not related to income. But we shall see. I'm not completely convinced just yet. So I hope that was helpful. I hope that kind of helped you maybe know how to report some of these amounts, at least the personal use sales of capital assets, right? There is something we can do there, and I do have a video that covers an example on how to do that. So again, I'll link that below. But for these other items, there's really no reporting mechanism yet. And so hopefully the IRS will fix that. So thank you for watching. I hope that was helpful. If you have any questions, please leave me a comment below. And I look forward to seeing you again on the next video. Thank you so much.